Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. We focus on factual developments, economic analysis, and responsible discussion surrounding Iraq's economy and the Iraqi dinar. Thank you for joining us today. In today's update, we are taking a closer look at an important topic that continues to generate discussion among Iraqi dinar followers around the world. The focus of today's analysis is the ongoing debate surrounding the future exchange rate of the Iraqi dinar, the role of the Central Bank of Iraq, the possibility of currency appreciation, and the likelihood of outside intervention from major international partners such as the United States. Recent commentary from market observers suggests that the Central Bank of Iraq is unlikely to surrender control of the Iraqi dinar and allow the currency to float freely on international markets. At the same time, some individuals continue to speculate about whether Iraq could choose to increase the value of its currency through administrative action. Others wonder whether international partners could play a role in supporting a higher exchange rate for the dinar. As always, it is important to separate speculation from economic realities and examine the situation through the lens of financial policy, monetary management, and economic fundamentals. To begin, we need to understand the role of the Central Bank of Iraq. Like central banks around the world, the institution is responsible for maintaining monetary stability, controlling inflation, managing foreign reserves, supervising the banking sector, and protecting confidence in the national currency. The Iraqi dinar is not simply a financial instrument. It is a key component of Iraq's overall economic stability. When economists discuss whether a currency should float freely or remain managed by a central bank, they are essentially debating how much influence market forces should have over exchange rates. In a fully floating system, supply and demand determine the value of a currency. Governments and central banks have limited direct control over daily movements. In a managed system, central banks actively participate in maintaining exchange rate stability through monetary tools and foreign currency reserves. Many economists believe that Iraq is not currently positioned to completely abandon management of its currency. There are several reasons for this view. First, Iraq remains heavily dependent on oil revenues. Oil exports generate the overwhelming majority of government income and foreign exchange earnings. Because oil prices can fluctuate significantly, policymakers often prefer exchange rate stability to protect government budgets and economic planning. Second, Iraq continues to develop its financial institutions and private sector. While progress has been made in recent years, policymakers generally prioritize economic stability over rapid monetary experimentation. A sudden transition to a fully floating exchange rate could introduce volatility that may affect businesses, consumers, and investors. Third, maintaining confidence in the currency remains a critical objective. Central banks around the world recognize that exchange rate shocks can sometimes create inflationary pressures or uncertainty within financial markets. For this reason, many emerging economies choose gradual reforms rather than dramatic changes. This brings us to the question of whether Iraq could simply raise the value of the dinar against the US dollar through administrative action. Historically, countries have occasionally adjusted exchange rates through government decisions or central bank policy changes. Iraq itself has experienced different exchange rate regimes throughout its modern history. Some observers point to past examples and suggest that Iraq could announce a stronger exchange rate if policymakers desired. However, modern global financial markets operate differently than they did decades ago. A currency's long-term value is ultimately influenced by economic productivity, investor confidence, foreign reserves, trade balances, fiscal discipline, and overall economic performance. Even if authorities were to establish a higher official rate, That rate would need to be accepted by financial institutions, trading partners, businesses, and markets. Exchange rates are not sustained solely through announcements. They require economic support and market confidence. This is one of the reasons economists often caution against simplistic assumptions regarding large currency revaluations. The process is much more complex than changing a number on paper. Supporters of higher dinar valuations frequently point to Iraq's significant oil resources, strategic location, young population, and reconstruction potential. These are legitimate strengths that can contribute to economic growth over time. Iraq possesses some of the world's largest proven oil reserves, and energy exports continue to provide substantial revenue for the government. Additionally, infrastructure development, banking reforms, digital modernization, investment initiatives, and efforts to improve the business environment may strengthen economic fundamentals over the long term. These developments are important because strong currencies generally emerge from strong economies. Sustainable currency appreciation often reflects improvements in productivity, investment, exports, and economic confidence. At the same time, economists emphasize that challenges remain. Iraq continues to navigate fiscal pressures, public sector demands, infrastructure needs, regional geopolitical uncertainties, and efforts to diversify beyond oil dependence. Addressing these challenges remains a major priority for policymakers. Another important aspect of today's discussion involves the possibility of international intervention, particularly from the United States. Some market participants speculate that the United States could support or facilitate a substantial increase in the value of the Iraqi dinar. However, most economists consider direct intervention of this nature unlikely. There are several reasons for this assessment. The United States generally respects the monetary sovereignty of other nations. Exchange rate policy is typically determined by a country's own central bank and government authorities, while international cooperation exists through organizations such as the International Monetary Fund and the World Bank. Direct manipulation of another nation's currency valuation is generally not standard practice. Furthermore, international financial institutions typically encourage market stability, transparency, and reforms rather than sudden exchange rate changes that could create uncertainty. When the United States works with countries on economic development, the focus is often on financial sector modernization, regulatory improvements, and anti-money laundering measures, investment frameworks, and broader economic reforms. These initiatives can strengthen an economy indirectly, but they are not usually designed to engineer dramatic currency revaluations. This distinction is important because it helps establish realistic expectations. Economic progress can support currency strength over time, but sustainable appreciation generally emerges from improvements in underlying economic conditions rather than external directives. The statement that we do not know what to expect because of the way the world is going reflects a broader reality facing global markets today. The international economy continues to experience rapid changes. Central banks around the world are adjusting monetary policies. Energy markets remain sensitive to geopolitical developments. Trade relationships are evolving. Technological transformation continues to reshape industries. Investors are adapting to changing economic conditions across multiple regions. In such an environment, uncertainty is not unique to Iraq. It is a global phenomenon. For Iraqi dinar followers, this means that patience and careful analysis remain essential. Economic developments rarely follow a perfectly predictable path. Unexpected opportunities and challenges can emerge at any time. Looking at the short-term outlook, the most likely focus remains on stability. The Central Bank of Iraq has repeatedly demonstrated its commitment to maintaining orderly currency markets and supporting financial stability. Policymakers continue to monitor inflation, banking sector performance, and foreign exchange conditions. In the near term, market participants will likely pay close attention to oil prices, government spending, foreign reserve levels, banking reforms, and investment activity. These factors can influence economic confidence and shape expectations regarding the future direction of the Iraqi economy. The short-term implication for dinar followers is that dramatic policy shifts should not be assumed without official confirmation. Responsible analysis requires focusing on verified information and established economic indicators, rather than speculation. Over the longer term, the outlook becomes more closely tied to Iraq's broader development trajectory. If Iraq successfully expands economic diversification, attracts investment, strengthens financial institutions, improves infrastructure, and continues reform efforts, these developments could enhance confidence in the country's economic future. Long-term economic growth tends to create a stronger foundation for currency stability and potential appreciation. However, such progress typically unfolds over years rather than weeks or months. Investors and observers should remember that successful economic transformation is usually gradual. Major economies around the world achieved their current positions through sustained reforms, investment, productivity improvements, and institutional development over extended periods. For Iraq, continued progress in governance, financial modernization, private sector growth, and economic diversification could become important drivers of future prosperity. Another factor worth considering is the role of foreign reserves. Central banks often rely on reserve holdings to support monetary stability and maintain confidence in their currencies. Iraq's oil revenues have historically contributed to reserve accumulation, providing an important buffer against economic shocks. Strong reserves can help policymakers manage volatility and support exchange rate objectives. This is one reason why reserve levels are frequently monitored by economists and international observers. Similarly, banking sector reforms continue to attract attention. Modern payment systems, enhanced compliance standards, digital banking initiatives, and stronger financial institutions can improve economic efficiency and encourage investment. These developments may not generate dramatic headlines, but they are often among the most important foundations of long-term economic strength. For followers of Iraqi Dinar News, understanding these structural factors is essential. Exchange rates are only one part of a much larger economic picture. Currency performance is influenced by countless variables working together over time. This is why professional economists typically focus on indicators such as GDP growth, inflation trends, fiscal balances, reserve levels, investment flows, productivity improvements, and policy reforms when evaluating a currency's future prospects. The discussion surrounding potential revaluations often captures public attention because exchange rates are easy to understand and monitor. However, sustainable economic progress depends on deeper fundamentals that receive less publicity but carry greater long-term significance. As we evaluate today's commentary, the central message appears clear. Most economists do not expect the Central Bank of Iraq to relinquish control of the dinar and allow a completely free float in the foreseeable future. They also view major external intervention designed to significantly raise the dinar's value as unlikely. At the same time, Iraq possesses important economic strengths and opportunities that could support long-term development. Continued reforms, investment, and economic modernization remain key areas to watch. Rather than focusing exclusively on speculative scenarios, responsible observers may benefit from monitoring official statements from Iraqi authorities, central bank policies, economic data releases, and broader reform initiatives. These sources provide a more reliable foundation for understanding the direction of Iraq's economy and currency. The future of the Iraqi dinar will ultimately be shaped by a combination of domestic policy decisions, economic performance, global market conditions, and investor confidence. While uncertainty will always exist, Informed analysis helps separate realistic possibilities from unsupported assumptions. As developments continue to unfold, we will keep monitoring the latest economic indicators, policy announcements, and financial trends affecting Iraq and the Iraqi dinar. Our goal is to provide balanced coverage that helps viewers stay informed without unnecessary speculation or exaggerated claims. Thank you for watching today's update. If you appreciate responsible, factual, and professional coverage of Iraqi dinar developments, be sure to subscribe to the channel and like the video. We will continue bringing you the latest news, economic analysis, and verified information regarding Iraq's economy and currency. As always, this content is provided for informational and educational purposes only and should not be considered financial, investment, or trading advice.